There's never been more debt flooding the system in history, more cash floating around, finding its way into any speculative investment. Stocks at any price? Sure. Art? Okay. Hockey cards for $1 million? Absolutely. This is like all previous bubbles before it put together. But today we have more denial than ever, more love from the Fed, more Janet Yellen, more layoffs to boost stock prices. It's all good, right? You came here for the truth, so let me unveil that for you. Today we are going to go all over the map. I'm going to show you some information you need to know. Talking about negative interest rates, talking about the Bank of Japan. We're going to look at what's happening with some stock indicators. I've got some information that is going to give you what you need to know today, so let's begin. Bank of Japan becomes the biggest Japan stock owner with $434 billion worth. You have to understand what's happening here. The Bank of Japan, the central bank, is actually printing up money out of thin air and buying stocks, and now they've bought so many that they're the biggest owner. I said this would happen, and it doesn't take a genius to figure out. They were continuously buying, the real buyers are fleeing, the real buyers are leaving, and as a result, they are left being the lender of last resort, in this case, the buyer of last resort. BOJ passes the GPIF on big monthly plus stock gains. Market feels distorted on combined presence. So understand what they're doing. You already had the pension fund, the government pension investment fund. They were the biggest owner, and now the central bank has surpassed them. So it's their own country, whether it's coming from the central bank, whether it's coming from the pension fund, that are buying everything. Massive exchange-traded fund purchases by the BOJ to support the market this year, combined with subsequent valuation gains, pushed its Japanese equity portfolio to $434 billion worth. This marks the first time that the central bank's holdings have eclipsed those of the pension fund, which the way that they look at it here is supposedly somehow fantastic. It's a good thing because they're supporting it. But you look at this on a deeper level and it just shows you how fake, how manipulated and contrived these markets really are. This is just a chart that shows us where it was back in 2010 up until the present. Clearly, they have manipulated this market beyond anyone's wildest dreams. As always, I'm keeping you up to date on what's happening with the negative yielding debt, and believe it or not, we are looking at $17 trillion worth. $17 trillion worth of negative yielding debt. How in the world have we ever got here in the first place, but now this is the second time? As you can see back here in 2019, it achieved this. It did break past that, a record level. This shows you the value of the currency is declining. I know that sometimes I always see the questions coming up. What exactly does it mean to have negative yielding debt? Well, this is the way it works. You put your money into this quote unquote investment, and as a result, you get back less than you put in. That sounds like a loss, but what if it was intentional? What if these companies were offering you something that you knew was going to actually get you less on the way out? Well, apparently there is $17 trillion worth of that stuff today. I don't have any deep analysis on this here, but I just wanted to mention it in case we end up dealing with it later on. I don't think we will, but anyway, mystery surrounds $7 billion outflow from Vanguard SP 500 fund. You could see on the bottom there the chart that corresponds to the information. I just thought it was interesting, wanted to bring it to you. If there's anything of relevance coming up, I will talk about it in future videos. The quarterly report from the Biz had come out, and I just wanted to show you this chart, specifically the one on the right-hand side. Sectoral performance rotates, and it might be a little difficult to see, but let me just explain it here. You're seeing the different sectors: technology, utilities, energy, so on. And at the bottom there, where you have the legend, it just explains that the reddish color is from essentially September to November. And then here we have the blue area, which is November to current. And things have really flipped. As you can see, the color differences and how over this period of time, there have been sort of, as they say, a rotation. And that is especially noticeable in energy, for instance. Insurance is on there. And even when we look at, let's say, banks, this has really been a big change in just a couple months, though if you look at the conditions, nothing fundamental has changed along this period. So it's just what some of these investment companies, the institutions, and of course the high frequency traders that have been moving a lot of this money around, perhaps they are seeing opportunities elsewhere. Big short investor Michael Burry reveals that he's short Tesla, tells Elon Musk to issue more stock at its, quote, ridiculous price. I thought it was funny, just wanted to bring it to you. You could see right here, the hedge fund manager advised Elon Musk to issue more shares while they sit at their ridiculous levels. Quote, that's not dilution, you'd be cementing permanence and untold optionality. I don't know what's going to happen to the stock, but when you look at it on the, let's say, the 3-month time range, look at it on the 6-month, look at it year to date, they show the same thing. It's just going up and up and up. There is complete and entire just ignoring every piece of bad information that could come out, everything that could suggest maybe the stock shouldn't be at these lofty prices. It doesn't have any impact on the stock right now. It might go down for a day, but after that, it's back smooth sailing again. Goldman Sachs has these sentiment indicator components now versus the past decade, showing us right now percentile rank versus the last 10 years, 98. It's at 98 today, never been higher essentially at this point. Well, I don't know what that means for the future, but I believe that we will be breaking a lot of records before we actually have a very serious crisis in the markets themselves. We are going to shatter a lot of records, which we already have, and it will be no doubt a real big drop from the top. The world exchange market cap had surpassed $100 trillion. If you look at what had happened in 2020, that came down to approximately $60 trillion, and it had gained $40 trillion in a matter of months. This is truly historic on so many levels, but as I'll show you in a moment, the amount of debt, the amount of liquidity and money printing that has taken place has corresponded quite accurately. On the other hand, we have seen the growth in the GDP being completely out of whack with that growth that we've seen in the stock market. Look at that green line. That's the GDP. The GDP, you look at it over different countries, some might have 3% growth and some might have 6% growth and might have 0% growth in other places, but it's usually fairly steady. And as you hit a crisis, it never gets back to that previous trajectory. But look at it today, as you can see with the green line, that's the GDP compared to what's going on with the stocks. I mean, it's just not even close anymore. And every time we get to those points in which it is exaggerated and goes far beyond it, we tend to have a pullback in the markets. As we saw throughout 2015, there was that experience. You had, of course, back in early 2018, many times. In fact, when you look at it, early 2020, you look at financial crisis time frame, it's all dependent on exactly how you line it up. Doesn't really matter. It's not perfect. It's not a science. But the point is, when we get to certain levels that are unjustified, this time and time again, I'm not necessarily pointing to the GDP, by the way. All I'm trying to say is that you hit these different indicators at these points, and it all comes sort of around this time frame. It might be a 6-month, or let's say even as much as 18-month time frame where everything is just going haywire. Something pops, and then we have a reversion to the mean. Okay, that's all that it means. All we're looking at is things get out of whack, and then they come back into, let's say, a realistic territory. That's history. The expectation for the S&P 500 to hit 4,500 would in fact require a lot of liquidity to be pushed into the system. It would be, let's say, approximately $10 trillion over the next year. That's where we are right now. I mean, that prediction by the end of 2021 would suggest approximately $10 trillion worth to be added in a matter of 1 year. They can do it. They absolutely are pushing for that. And it would be more devaluation of the currency. This article here is written by David Rosenberg, and what he's talking about is essentially the Federal Reserve having no ability to withstand any potential future crisis because they've done everything already. They lowered interest rates all the way to the bottom. He did suggest that perhaps they could go into the negative. He's saying that they're already doing the money printing and all the different programs, things that we've talked about here previously. But check this out. In the event of a wave of bankruptcies and defaults, the Fed will potentially become a direct lender to the non-financial business sector to help cauterize the bleed of job losses and personal income impairment, a move that would require bipartisan support to change the Fed charter. Yet another area that may be influenced by what happens in Georgia. We will see, of course. I don't know if that's necessarily the case, because look at what they've done so far. They didn't have to change the Fed charter. They didn't have to really deal with anything for Congress. They simply went around it. There's some laws in place. So let's just say, here's the money right here. Okay. Here's the Federal Reserve. Alrighty. And the Federal Reserve, in order to get that money to the people, okay, they have to go through this thing. It's called a law. Okay. And that's the Federal Reserve Act. But normally this is the pathway. It's got to go here. It's got to go here already. And that's traditionally the way it is. And it's set up for a reason. But if you're the Federal Reserve, you just go around it. And that's all. Done deal. And you can give your money to the friends in high places. You could print up $16 trillion, as they did, got caught, and nobody even gets a slap on the wrist. Millions of hungry Americans turn to food banks for the first time. I thought that was interesting, just to see how many people have not been using food banks for years, relied on them and so on, but using them for the first time. This article's written about all the different food banks and what they've been dealing with this year alone. It's out of the AP. I'm not going to go into it, but if you're interested, definitely check it out. There's some photographs as well as documentation. Restaurant closings top 110,000 with industry in free fall. This is an update. Previously, they were at 100,000 restaurants. Now they have officially gone to 110,000 restaurants. Store closures continue to go up. Many different industries are being hit hard right now, and certain areas obviously are going to feel it more than others. Certain sectors will feel it more than others, but this is going to affect the jobs. There's no doubt. A little bit of humor here. I always try to include something to make you laugh. Trudeau government won't say who got billions of dollars in aid. While some payments have been revealed, the destination of billions of dollars in aid remains secret. Why would they tell you? Why? You don't deserve to know. You don't deserve to know. The public shouldn't know where their tax dollars are going. My goodness, that's ridiculous. California water futures begin trading amid fear of scarcity. Futures on California Water Index launched by the CME Group. That's right, water, an essential factor in your life, is now being traded. Now, what does that mean exactly? Will they eventually have control over the water supply? I'm looking out, thinking into the future. 5 years, 10 years, 20 years. The fact that they can do this, to me, is frightening. At this time, maybe it's nothing. But I'm talking about the future down the road. This is just dangerous play. In the introduction, I talked about a card that was $1 million, and I wasn't kidding. Wayne Gretzky card reaches for $1 million in sports collectible boom. I mean, 1 million for a card? This has just gone off the charts. I don't know the value of that card. I mean, I guess it is $1 million if somebody's going to pay that money, but it just shows you the speculation that's taking place. It's like the tulip mania, it's like the financial crisis, the housing crisis, the dot-com boom. It's everything wrapped into one. This should be very fun. There's no doubt. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. And if you want to learn about e-commerce, I'm talking about how to sell stuff on the internet. You can learn for free in my course, the AmazonGPS.com. And if you are interested in the financial system, learning the ins and outs, being able to ask the right questions, then you got to read my 2 books. Check them out at the link in the description. And if you want the audiobook, themoneygps.com. Wait. Hold on a second. Have you seen this video? If not, you definitely want to check it out. Click it. I will see you there.